Welcome to Wealth Standing Podcast. This is episode 522. We're live on YouTube. Today is June 2nd, 2026. I'm your host, John Pugliano. I'm also the founder and money manager at investablewealth.com. My son Joe is in the co-pilot seat today. We're going to talk to you about all the hype I'm hearing in dealing with the SpaceX IPO. I've heard I guess more comments, questions about this than just about anything here recently, probably even in the last couple of years. So, I don't pay a lot of attention to the headlines. I don't know how much the SpaceX IPO is being hyped in the media, but I know from your comments and your questions in the audience, it's on your mind. And so we're going to talk about that. If you see in the title of today's episode, I already straight up tell you I'm not buying it. But that's just because I don't buy any IPO. I think that most IPOs, not all, but most IPOs you can get at a better price if you're patient and wait. And that's because by the very nature of an IPO, when it's released, they create a whole big roadshow about it. It's a marketing effort. All the investment bankers, right, whether it's Goldman Sachs or JP Morgan or whoever, they're all going to put out the best information they can, put all the lipstick on the pig they can, because their job is to get the highest price, for that transaction. And so just like, buying a used car or any product, you want to be skeptical of what the salesman's telling you. And so I always wait, regardless of how badly I'd want to get in on an IPO. I personally would always wait. At least 6 months. This one may be a little different because there are some nuances about when people can sell and based on how much the stock rises. Joe, I don't know how much of that you might have. You have any of that in front of you now, statistically?
No, yeah, there's incentives. If they hit certain marks, then more will come up.
More will come up. More can be more.
Yeah,
More insiders can sell,
sooner.
and employers can sell. Employees can sell. So that makes this one a little different. But my concern, again, with any IPOs, specifically with this one, is that, there's going to be plenty of opportunities to buy this stock. They're only putting out to the retail market like less than 3%. Is that right,
Yeah.
Joe?
Yeah,
Less than
5% total, but only 30% of the 5% is for retail
is
investors.
for retail investors, right? The other is going to be for employee stock options and such, right? So there's a lot of they're creating a scarcity. They're creating that, but by releasing such a small amount, there will be multiple offerings in the future. And you can bet every time the market's at a record high, that would be the time they bring it to market because, again, they want to get the best price. There's nothing wrong with getting the best price. The point you have to remember here is you're the one that's paying it, right? Because there are no good or bad stocks. People will say, is this a good stock? Is this a bad stock? There's no good or bad stocks. There's only good or bad stock prices. If you can get in at a fair value or below a value, any stock is good at that point, because that means that you're going to get better appreciation in the future. And so in general, as far as IPOs go, that's what I'm skeptical of. And then specifically, I'm very skeptical of Elon Musk. I know many people in the audience love him. And I don't not like him, but I'm skeptical of everybody, right? I'm just a cautious person by nature. And he, like the Orange Man, like a lot of billionaires, they say a lot of things, and they can because they're billionaires, and they don't all come true, and they're not all truthful. So you have to be careful with it. I was trying to think of specifically in terms of Musk, some of the outrageous things he said over the years that just, all right, I guess we could spend episodes on that.
Yeah, I start with Tesla, right? And
All the Tesla hype.
yeah, we're gonna have fully self-driving cars by now.
Right. And by the way, let's go back 50 years. I'm still waiting on flying cars, right? Because when I was a kid and I watched the Jetsons cartoon, they were telling me back then I was going to get a flying car. Well, that's been over 50 years. It still hasn't happened. Teslas are nowhere near full driving. Um,
They're good.
they're good. They're good. It's not.
Yeah,
And again,
it
I'm
is
not.
good.
I'm not criticizing that. That's not good, but it also has not lived up to the hype that he has promoted, as with many things. Tesla. You go back 15 years ago, Tesla was going to be the dominant EV vehicle forever because they had first mover advantage. And again, they've done amazing things. I may even buy a Tesla. I'm looking.
Gas prices got you stretched thin?
Oh yeah, of course. No, I could care less about gas prices. I actually bought a house that has a charger in it, and so I don't have to put one in it. So that's part of the incentive for me. But I would not be opposed to having a local commuting car that I can plug in my garage. And so, yeah, my next car could be an EV, might be a Tesla. I'll definitely look at them. My biggest reason for wanting to buy a Tesla is I don't have to deal with a car dealer. I can buy direct from the company. Um, so they've done, there are a lot of innovative things they've done. But I mean, remember the hype around the Cybertruck? Hasn't panned out, has it? In
No.
fact, what's the latest you read on the Cybertruck and the current sales?
Oh, yeah, what was it? Their sales would have dropped dramatically the last quarter had Musk not bought a significant amount for Neuralink and SpaceX and all, across all his
They
companies.
went out and,
He
and
went out and
mandated to,
bought
to buy.
a
Yeah.
a bunch of Cybertrucks to boost the sale numbers.
Right? And that is those kind of things that worry me. As a is the whole SpaceX endeavor. It's not if you go out and buy SpaceX, you're just not buying SpaceX. He's thrown in all of his stuff. Like, what else is in there?
Yeah, you got Tesla, or sorry, not Tesla. You've got Twitter
Twitter's in there.
or
There's
X.
X is in there.
Yeah, his AI companies, right? So Grok, their AI agent. Um, what Starlink,
Starlink's part of it,
right? That's
which
their
which kind of go that makes sense.
yeah. That's the money behind all of it.
X being in there doesn't make any sense.
Right.
Starlink does, and so you ask yourself, well, why would X be in there? And it's probably because Musk doesn't want it on his own personal balance sheet, right? He overpaid for Twitter. I don't think he even wanted to really buy Twitter. I think he wanted to control it, but he didn't want to buy it with his own money, and he shut off his mouth too much and ended up having to buy it personally. And what's he done? He's put that on somebody else's balance sheet. Um, Again, good for him, but I would be want to be very cautious. And also, there's no transparency not only with SpaceX, but again with any IPO, and especially the way he's got this structured, you don't know what you're buying, and it's going to take many quarters of releasing public data for people to get a handle on that. Right? That's another reason why if you wait 6 months, you're not guaranteed you're going to get a better price, but you are probably guaranteed you're going to get better visibility into the real profitability of the company. And there is no profitability of this company. There won't be for a long time. Again, Tesla wasn't profitable for a long time. Companies like Amazon weren't profitable for a long time. So it isn't to say that you can't make money off of these companies. It's just that be skeptical, right? Because you're being sold a product and you don't have to go to outer space to make profits. There are plenty of opportunities right here, right on Earth, right in the publicly traded markets where you can get great returns. So you don't have to stretch yourself out in these things.
Um, and I mean, on that note, right? Everyone in the media is talking about space and stuff, but what's Berkshire Hathaway doing right now?
Yeah, interesting, huh? Berkshire Hathaway, and not run by Warren Buffett necessarily anymore because he's retired. I'm sure he still has some influence there, but yeah, they've run out and bought a a home construction company, right?
Yeah,
A
Taylor Morrison.
Taylor Morrison, a home builder, and it fits in with many of their lines, right? They also already own Clayton Homes, and they own, I think, Sherwin Williams Paint, and so they're in that market. But yeah, Warren Buffett is not going out leaping into space. He's buying opportunities right here on Earth, which counterintuitively too. I mean, a lot of people are running away from the housing market. He obviously sees an opportunity there, and I do too as well. I own Toll Brothers, um, not necessarily related directly to the housing market. I also own companies like United Rentals,
United Rentals, yeah.
um, because I think the construction is going to continue, and I do think we are going to get eventually lower interest rates. The housing market is not moving as long as mortgages are above 6.5%. We need to get down below 6. Um, and I don't know how far below 6 we'll get, but if we can get somewhere between 5.5 and 6, that's what's going to pick up the housing market. That's why I continue to own uh, regional bank stocks. I think as those interest rates go lower, these things are going to thrive. So there's plenty of opportunities there without having to go all the way into outer space. And if you do want to go to space, we've talked about it before. Um, I think we mentioned even last episode, GSAT, right? And that's not the only satellite company out there, but GSAT has been around for 20 years. Um, they've gone through a lot of peaks and valleys. They've currently been through a big peak. Um, and when I talk about this, I'm not telling people to run out and go buy GSAT today. This was something that you should have bought like 18 months ago.
Yeah.
Amazon is currently acquiring it or possibly going to acquire it. So it's up, I don't know, is it 300% or something in the last
Yeah, around
18
there.
months, somewhere in that range. Um, and that was something you could have bought in the public markets. Again, you've probably never heard about it because it's not hyped up like the SpaceX IPO is, but it makes money, it's profitable, and you could have made a killing on it, had you bought it a year ago. Um,
It's a double-edged sword though, right? Because there's also, was it the VSAT was their competitor who recently tanked because they were, on one of the spaceships that exploded, right? Or
well,
no,
no,
they
no,
put
they
it
were
into
in
the
the one
wrong
that went
orbit.
into the wrong
Wrong
orbit. They
orbit,
put
yeah.
was it Blue Origin? Was it the Blue Origin one? I
I
think they
don't remember
put
who
Blue
launched
Origin
it,
into
but
into the wrong orbit. That was is it VSAT?
yeah, I'm pretty sure
That
that
was
was them,
VSAT,
yeah.
right? So yeah, and that's the point too. There are risks, right? Don't go out if you do buy into SpaceX. Don't go out and put your life savings of $1,000 into it because something can happen. They can have a launch pad explosion, like
Yeah, Blue Origin
that
was
was
that.
Blue Origin,
Yeah,
right? You look at the problems that Virgin Galactic has had, but they've been around for 20 years, I think.
yeah.
Um, a lot of ups and downs with that stock. And you go back 20 years ago, though, people were talking about how it was going to the moon, right? It was going to take off. Well, it's had a lot of fits and starts. And again, with Musk, he has done amazing things. Tesla, I think, over its 16 years of publicly trading, I think it's averaged right at 40% annualized rates of return. But it's not a straight line. You look at a chart of Tesla, it can drop 70% and then 18 months later bounce back. Again, it's not that it's a good or a bad stock. It depends on what price you buy it at. If you buy it at a peak, it takes many years oftentimes to get your money back. If you buy Tesla at the multiple lows it's had, yeah, you could have made a killing. I'm sure SpaceX will be the same way. It's going to go up, it's going to go down, it'll pull back to its 50-day moving average, its 200-day moving average. Those are probably times that you want to get in and buy. I don't have the stats in front of me, but I think last time I looked at Tesla, there were probably at least 4 times in the last 16 years when the stock dropped 50% or more, and in some cases like 70%, 75. Um, and if you look at smaller drops, like just a 30% drop, I say just, right? 30% is a big drop, but in terms of Tesla, that's not a big drop. I would almost bet you, guarantee that if you look at a chart of Tesla, you will see there have to be at least 10 times in 16 years when Tesla has dropped at least 30%. And SpaceX, again, will most likely be similar. There's more risks, there's more cost, there's more extended times before they're profitable. There's all kinds of things that we don't know about. Again, um, as far as we know, X, Twitter, is not making any money. There's been different reports on that, but right, that's thrown in there. And why is that? Because he doesn't want it on his balance sheet. He wants to put it on yours. That's got to get diffused through the system. Will that be spun off someday at a profit? Who knows? But for now, there's going to be a lot of ups and downs and uncertainties with that company. And if you want to invest in space, hey, go buy into the titanium supply chain, right? Or or the companies that make components of the rockets, or the companies that make the components, the supply system for the fuel. Right? That's where I think these secondary and tertiary markets are, that have much less risk, because those companies also have real world businesses on Earth as well.
We talked a lot about Tesla. It'll be just interesting to see what happens in terms of people moving from one position to the other, right? And
Yeah, what do you think is good? So you're saying about the Tesla. A lot of people have bought Tesla stock because that was really a way for them to get a share into SpaceX. Are they all going to sell and just go buy the SpaceX? That's something else that I have seen in the media. They're also talking about, we've got all these IPOs coming on, SpaceX, um,
Anthropic.
Anthropic, OpenAI or whatever. All these things are going to come on, and they're acting like it's just going to suck all the money out of the market. Um, just looking at it as a zero sum game where just because you go buy into SpaceX or you buy into Anthropic, it's like the money's destroyed. And it isn't, because what happens? Other people are making money on the other side of the trade. That money's got to go in somewhere, right? They're going to buy real estate. They're going to buy um, other companies. They're probably going to buy titanium companies and these other things with their money, because the money doesn't get destroyed. It just moves around. But to your point, and moving around it, a lot of it potentially could move out of Tesla, which has brought Musk to say that what he may even buy Tesla
Right, yeah.
with SpaceX,
Right, yeah.
because he wants everything to be X, right? It's all this big X conglomerate. And again, I think he's overselling the whole thing. Again, Tesla, it's a data company. They're telling you it's going to have all this data, and well, yeah, they do, but you have to monetize that. And yes, having the infrastructure in space of artificial intelligence could be cheaper because the sun never sets up there, so you can have efficient solar panels, and you don't have government regulation preventing you from building data centers. Uh, you don't have as much cooling. I mean, they're talking about, hey, you don't have a cooling cost because there's a vacuum in space.
Yeah, you don't have to fight the Utah government
You don't have to
for
fight. Yeah, if you're Mr. Wonderful, you don't have to fight uh, Box Elder County, Utah, to get your data center in. Yeah, but you know what? It's not easy to do things in space, right? There's a reason we haven't done a lot there yet. It's not easy to do. It's a very harsh environment. There are government regulations. There are also state actors that maybe would want to take out your satellites or sabotage them or damage them. I mean, there's a lot that can go wrong, and people just need to keep that in mind. Along with a lot going wrong, I don't want to sound like a glass half full or a negative Nelly, because that's all you are hearing in the media. I mean, for the last 2 years, it's been nonstop. It's tariffs are going to create a global recession. Oh, shutting down the Straits of Hormuz, 20% of uh, oil traffics through there. That's going to cause a global recession. Um, Extended war in Ukraine, right? I mean, we're going on 4.5 years on the war in Ukraine now, and I think we're coming up on the third year for Israel fighting in Gaza. More than 3 months now with the Straits of Hormuz either shut down or being disrupted. Hey, look at the scoreboard. S&P 500 hitting record highs, right? It surprises even me how high it keeps going up. But it all comes down to not hype. It comes down to reality. Yes, there's a lot of enthusiasm around artificial intelligence, and some areas may be in a bubble, but it's profitable. It's not like the dot-com bubble where profitability. There is companies that are selling AI that are making money. There are companies that are increasing their productivity, and they're making money. So um, that's what it all comes down to. And that's, again, that there's no good stock or bad stock. It's all about the price. The price, the thing that makes the price good or bad is its return on investment. And right now, first quarter earnings have come out. I think I write down the number: 28.6%. 28.6% gain in profits year over year. is what the S&P 500 is reporting. And that's not all just the Mag 7. In fact, some of the Mag 7 has stumbled, and a lot of those profits are diffused throughout the other 493 companies. That's good news, right? Companies, railroads are making money, copper mines are making money, carbon fiber companies are making money. It's not all just about chip companies. It's not all just about people directly in the data centers. It's the money's being spent there, but in the old trickle down days of trickle down economics, it spreads throughout the economy. And for now, there's no sign of that letting up, even though the Straits of Hormuz, where 20% or Hormuz, my Pittsburgh accent, I'm sure listeners will correct me, I pronounce it wrong, but the Straits of Hormuz shut down for 3 months, and the world is going on, right? Markets adjust, people adapt, companies find a way to have alternative sources. They take advantage of inflation and price increases to pass along those increases, and that's how they make more money. Um, was it Hewlett Packard Enterprises that was at capacity? Is that what we saw this week?
Yeah, they've got a big backlog.
You got a big backlog, right? And their stock soared today or yesterday.
Yeah, today it's up 15% or something.
These companies are at backlogs. Sienna, a company that we're heavily invested in, it announces, I think, Thursday morning.
Yep.
We'll see what happens. That again, this is opportunities on Earth today, right? You don't have to go, even though they are related to space trade because it's fiber optics. Their components are up there as well. But they announce earnings on Thursday morning. And from everything we can tell, they're heavily backlogged, which is why we also have bought into Lumentum and Coherent, suppliers to that industry. We have not bought into some of the other players in that field that compete directly with Ciena, like Nokia. I think Samsung's another one. I wanted to stick with more of a US based company, but all these companies are flourishing because of the backlogs. They just simply can't get enough components to make the products, and therefore they're able to pass these along at higher prices. It caps their growth rate, but it doesn't cap their profits. We'll have to wait and see how Ciena's announcement goes, but it definitely worked out for um, HPE, and I'm trying to think of some others here that have had some backlogs that have just caused their companies to skyrocket.
Yeah. You keep digressing.
I I did.
Um,
Guilty.
but one thing you mentioned in there, bringing it back to Starlink, there's a lot of competition in other areas, right? SpaceX, they've had no competition in terms of their at least Starlink side of the business, right?
Right.
But that's starting to change. Or you got Amazon. Supposedly, their Amazon Leo will be released at some point this year.
Right.
Um, I saw Russia release
Other governments, right?
some satellites.
Yeah, Russia's trying to get back in position to have better geosynchronous type both satellites for commercial use and military defense. That's a great point on the competition. And again, we can compare that to Tesla, where again, 15 years ago, Tesla was really the only game in town. They had a massive um, first starter advantage, right? What about today? What about BYD, right? I mean, the only reason that Tesla isn't losing share to BYD in the US today is because we've banned Chinese cars. But you look at globally, I think Tesla's volume is down a good 50% or more in most parts of the world because there's so much more competition for those cars. And SpaceX and Starlink are going to start, when SpaceX first came along, they were competing basically against NASA, which a government bureaucracy, they were easy to beat, right? Because there's so much inefficiencies. But just like the EV business has evolved, the space business is evolving. Other people are going to use reusable rockets. Other people are going to, have access to these launch pads and things, and the moat goes away, and there will be There will be quite a bit of competition. Yeah. So in fact, you don't own a Starlink yet, right?
I don't.
Yeah. Are you going to hold out for Leo from Amazon or
I don't know. They haven't given a clear timeline of when they'll be out, right? So I think we might be buying Starlink. Um,
but we as in me or
we
we as in
we
you?
we as in the business.
Yeah, because it would be a business. It is a business expense. True,
That's
true,
right. Yeah,
true.
we went out camping last week and had to drive a little bit.
Yeah. I have to correct my young son who's still inexperienced in the world of business. We did not go camping over Memorial Day. What did we do?
We went and did a business, oh, what did you call it? You have to remind me what you called it.
It it was a contingency.
That's
It
right.
was, it was a contingency site exercise. We were making sure that we could operate off grid so that we could still fulfill our business functions and serve our clients. So therefore, it was not a vacation. It was not camping. It was a legitimate business trip.
That's right, and Starlink would have made it a little bit better.
Starlink would have made it even better because we could have gone farther out
Yeah.
um, beyond our Verizon and our. We have dual capability on phones, so that we can, if Verizon's down, we can use somebody else. Um, but yeah, if we had Starlink, that would add another level of sustainability and resilience to our business. So
Yeah,
absolutely, if we get a Starlink system, it would be a guaranteed business expense.
that's right. So final thoughts, you're not buying the IPO.
I'm not buying the IPO. What about you?
I'm not buying the
You're not
IPO.
buying the IPO either.
No.
Okay. All right. And we'll so there's no competition there. We don't have to see which one of us is right on that one. But you are buying the Starlink system probably
Yes, most likely.
with my money.
That's right.
My money. All right. Any other questions or things come up in the chat room?
Oh,
Okay. Well, I'll tell you, I want to end on this note. These profits are real. Okay. There's lots of gloom and doom in the headlines. That's what sells, right? In the media, if it leads, it bleeds, or if it bleeds, it leads, however they say that. Um, but we are experiencing extraordinary profits. They can't stay this level forever. So there will likely be some concern when profits drop down to only being 15%, right? You'll see a pullback in the market. You know what? That's when you want to buy. Any new money that I'm holding on to right now, or if you do follow our blog post, maybe a week, 2 weeks ago, we sold some positions. I forget when it was. Time is just so compressed anymore. I
yeah.
can't keep track of it without a calendar in front of me. But a week or two ago, we sold some positions, mostly laggards. You'll see us doing more of that because I want to get rid of. A lot of people ask me when's the best time to get rid of a underperforming stock. We'll have to do a whole episode on that, but it's when the market's up, right? Because when the market's up, it's up because more than 70% of all stocks in the market are up. So the bad stocks are up as well as the good stocks. The underperforming stocks are up as high as the others are. And so this is a great time to be trimming those losing positions. And nothing says you have to go out and reinvest that money right away. Currently, I'm putting some money on the sidelines. I have it in money market funds paying over 4% interest, and I'll bide my time as opportunities come up, either in individual stocks or if there's a market pullback, I'll buy back in because that I don't think that this bull market has run its course just yet. You have anything else, Joe?
Nope.
All right. Joe is a man of few words. So until next time, as always, this is Joe and John wishing you the very best returns.